Hi, this is Chiro. In this video, we're going to talk about investing in Arcimoto and Electra Meccanica as of September 2020. If you enjoy this type of content, consider subscribing. If you're new to investing, I made a beginner-friendly guide to investing that you can check out titled How to Invest from Stocks to Options. Before we talk about the companies, just a quick disclaimer. I am not a qualified investment advisor, and this video is not intended to be investment advice. I have investments in these companies, but I am not sponsored or otherwise affiliated with Arcimoto or Electra Meccanica. If you're only interested in the investment strategies, you may want to skip ahead a bit. I've provided timestamps in the video description. Two of the main problems standing in the way of widespread electric vehicle adoption are cost, as batteries are expensive, and weight, as batteries are significantly less energy dense than gasoline. These problems compound as a heavier vehicle needs more batteries, but more batteries means an even higher cost and even more weight. Both Arcimoto and Electra Meccanica are similar in that they tackled their problem by making smaller, lighter vehicles that still achieve decent range and performance at a reasonably accessible price. Starting with Arcimoto, this company trades under the ticker FUV, which stands for Fun Utility Vehicle. The FUV is also one of Arcimoto's main product lines, and is a three-wheeled vehicle that can seat two people. The FUV is most suited to city driving with a top speed of 75 miles per hour, a 102 city-mile range, and has a starting price of almost $20,000. Arcimoto is planning to ramp up production over the next few years, and may be able to lower this price further once mass production is underway. Arcimoto has other product lines built on the same base, designed for delivery services and first responder fleets, which I think will be another significant opportunity for growth. The second company we're discussing is Electra Meccanica, which trades under the ticker SOLO, or SOLOW, which is also named after their main product line, a three-wheeled vehicle intended for use as a daily commuter. As the name suggests, the Solo seats only one person, has a top speed of 80 miles per hour, a range of 100 miles, and a starting price of $18,500. Wait a second. Are these the same company? Electra Meccanica started production of the Solo on the 26th of August 2020, so hopefully we'll see how their profit margins and production capacity look like in the coming quarters. They also plan to release two luxury or performance-focused EVs in the future, called the Tofino and E-Roadster. Conceptually, I like the idea of streamlining commutes with a small built-for-purpose EV, but if you already have a car, it doesn't functionally replace it, and I'm not personally sold on owning a second car just to commute. Having said that, I still think there's potential, and can you really blame me if I have a soft spot for a company headquartered in Canada? Oh, Canada. With the company backgrounds out of the way, I'm going to take the opportunity to re-emphasize this disclaimer here before moving on to the investment strategies. I like Arcimoto and Electra Meccanica and their vision, but the reality is that they're still burning cash as they grow. Both companies have recently raised tens of millions of dollars and should be able to comfortably fund their operations for the next few quarters and hopefully years. But to put it bluntly, remember that bankruptcy is a real possibility. I'm going to be comparing the investment strategies by the maximum risk and reward and what I'll call sleepability, which describes how well I would sleep at night employing each strategy. The simplest strategy to get exposure to these stocks is to buy shares. All the prices I talk about today will be approximate to the prices as of recording, but if you're a viewer from the future, don't worry, the thought process remains the same. Also, feel free to let me know if I've lost all my money on these investments yet. Anyways, Arcimoto was trading at around $6 and Solo shares were hovering around $3, so that's what you would stand to lose. Note that this doesn't necessarily make Arcimoto the riskier play, and I'm not comparing the risk between companies. If I had $100 in one of these companies and that company went bankrupt, I'm losing $100 regardless of what share price I bought at. With that out of the way, you have unlimited upside in either case. For sleepability, I rate both companies an 8. You can't lose more money than you put in, and if they survive, I think they have a bright future. The next strategy is buying warrants. Warrants are a way for a company to raise money and are kind of like call options. I believe Arcimoto has issued warrants before, but they don't seem to be publicly tradable, so I won't talk about them here. Solo warrants, which expire in 2023 and trade under the ticker SOLOW, were trading for about $125 and have a strike price of $425. Investing your money into the warrants can pay off because you only stand to lose $125 and your maximum reward is unbounded like with shares. However, note that you won't actually make any money exercising the warrants until the share price is at least $425, and like I mentioned earlier, the shares are currently only at $3. Even when the shares do reach $4.25, remember that you paid $1.25 for the warrants, so you'd still be losing money. To keep it simple, If you were investing $30, you would be able to buy 10 shares of SOLOW or 24 warrants. By owning warrants, you'd break even at $5.50, and this would only become more profitable than owning shares once the share price more than doubles at $7.25. It's your choice, but I think there's better ways to profit on success. For that reason, I give sleepability a 6. The next thing you can do is sell puts. I found the premium for puts a few months out to be pretty high. If I sell a put at a strike of $7.50, the premium is about $3.50, which in the worst case scenario of the shares going down would be like buying a share for $4. In the best case scenario, Arcimoto rises in price and I keep the premium. Assuming Arcimoto does well, this strategy still beats buying shares until the share price practically doubles to $11. That is, $7.50 for the shares plus the $3.50 premium, but you'll need to decide for yourself whether it's worthwhile. For SOLOW, it's a fairly similar situation. The premium is around $1, so you stand to lose $2 if they go bankrupt, but you keep the dollar if it's above the strike price. I do want to note that selling a put means someone else has the right to force you to buy shares until the contract expires. So if you employ this strategy, I would recommend keeping the required amount available in your account and not worrying too much until the contract expiry date. The uncertainty might bother some people a bit, so I would rate the sleepability a 7 if you have the means to cover the position, and 4 if you don't. I personally like the risk reward of this strategy and use it for myself, so I'm gonna give it my gold star. At the same time, if you're thinking about using this strategy, remember that both companies were trading in the $1 to $2 range as recently as June 2020, so it's definitely possible to end up at that range or lower. The last strategy I'll talk about today is buying calls. If you really want to bet on these companies flourishing in the short term, or don't want to put down the capital investment right at this time, this is the strategy for you. Your choice of strike price and expiry date will make a huge difference, but an in-the-money call for Arcimoto a few months out costs a few dollars, and about $1 for calls on SOLOW. Using this strategy, the stakes are higher. You're more likely to multiply your money and there's no limit on how much you can make, but there's also a higher chance to lose your initial investment. This isn't a bad strategy by any means since you can only lose what you invest, but the premium you pay won't be working in your favor. The sleepability depends on how well you're doing, so I'm giving it a 5 for sleepability. Or maybe 0. Actually, it should be 9. No wait, now it's a 3. And that's the end of the video. If you enjoyed this video, I'd appreciate if you dropped a like, commented, and subscribed to see future content. I put a link for a playlist to other companies I've invested in the top right corner, and YouTube picked a video that they thought you would like. Let me know in the comments if you invest in Arcimoto or Electra Meccanica and what strategies you use. Anyhow, thanks for watching and have a great day.